Global liquidity has been incredibly accurate for forecasting what will come next for BTC this cycle. However, we are watching a data point that is statistically even more accurate for predicting upcoming moves for Bitcoin. So we'll get right into it here on the global liquidity or M2 supply versus Bitcoin price chart we have here on BitcoinMagazinePro.com. And I feel like our videos have been pretty long lately. I feel like I've been waffling on, so we'll try and fly through everything today. And what we can see looking at global liquidity, there is a clear and obvious trend between the Bitcoin price appreciation and depreciation and the liquidity expansion or contraction from global banks. If you go onto the site here and scroll down, you can see all of the data points that are included here, all of the world's major economies. And again, like I said, it's pretty obvious to see the correlation or causation between global liquidity and the price action of Bitcoin. But if I go to the TradingView here, we can see that just the standard global M2 data point gives us a correlation between Bitcoin and that data point of 88.44%, which is, of course, an incredibly strong correlation. However, what many people like to do is add an offset or a delay, a lag, if you like, to this data. Now, everyone focuses way too much on exactly what this lag should be. Should it be 70 days? Should it be 100 days? Should it be 105 days? Minute, slight changes that really result in a very minuscule difference. I like to just put it to 70, and we're measuring the correlation here over 1,000 days, which if I just grab the tool here is pretty much, I mean, we're a week or two off, pretty much the length of this cycle so far. From our bear cycle lows to where we are now, it's about 1,000 days. That's where we're measuring over that length. And what we can see, adding this 10-week or 70-day offset to global liquidity gives us a correlation increase to 91.23%. And again, just from looking at the chart, it's pretty obvious to see as Bitcoin has moved up, it's because we've seen this delayed, lagged global liquidity also moving up. And when it's contracting, Bitcoin has struggled as well. However, recently we've seen a little bit of a divergence in these data points. We've seen global liquidity continue to expand, pointing towards more price appreciation for Bitcoin, whereas Bitcoin's price action has stagnated. We made new all-time highs and now have been in a bit of a drawdown period where prices consolidated and again retraced slightly. So is there a better way that we can actually use a data point similar to liquidity to gain a better insight on exactly what the price can do? So I'll set that offset back to 0 and I'll look at stable coins. So this is USDT, USDC, DAI, all of the cryptocurrency stable coins within the market. And again, what we can see is the correlation is even stronger, 95.24%. We can see when there's new liquidity injections, USDT being minted or printed, and that's inflowing into the cryptocurrency market. This is just dry powder waiting to be allocated, waiting to rotate into more speculative and risk-on assets. Typically, this will flow from stablecoins into Bitcoin, into Ethereum, and then maybe Solana, and then smaller and smaller market cap and more volatile and speculative assets. However, again, we can see a recent discrepancy where the liquidity of global stablecoins has continued to accelerate to the upside and make new all-time highs, whereas Bitcoin has stagnated. Now, we can apply an offset to this data, but this actually results in the correlation decreasing slightly from 95% to about 90%. So still obviously a very strong correlation, but not quite as high as global M2. However, if you didn't see previously, what we can also look at is gold. Now I'm going to quickly go back here because what we can see is looking at the gold versus Bitcoin correlation here on Bitcoin Magazine Pro. It's choppy to say the least. It's never really sustained a very positive or negative correlation. They're really kind of not moving independently, but not in synchronicity. They're not very synchronized, what I'm trying to get to. At least not for long and sustained periods of time. Now this is a 30-day correlation. If I change it to a slightly longer one, we can see that this lasts even longer. These periods of strong correlated conditions where both moving up in unison. And then again, like where we are now, where Bitcoin was moving up and gold was chopping, etc. So really not too many people actually pay attention to the correlation between Bitcoin and gold. And I feel like I'm waffling, so we'll speed up again. But if we look at the correlation of Bitcoin and gold, when we apply the same 10-week offset, we can see the correlation increases to 92.42%. If we go back to the global M2, we can actually see this is a higher correlation for this cycle between a 10-week delayed gold price action and global liquidity. And again, if we just zoom out and see how it's looked this cycle, it makes sense. They've moved very much in unison. They bottomed at practically the exact same time with this 10-week delay. And then since then, every single little bump and every single big rally, they've been pretty similar. As gold has moved to new all-time highs, Bitcoin has done the same. As gold stagnated and had drawdown periods, Bitcoin did the same. And now, as Bitcoin has made new all-time highs but had this pullback, this is one of the only data points with a very strong correlation, which kind of anticipated this. And we can see, just looking at this blue line here, which is the gold price action, it's actually been in this choppy, stagnant period of consolidation for many months now, going all the way back to June, July. Again, this is the delayed data, and far extending even to today. It still hasn't made new all-time highs many months later. So we could see if Bitcoin is to continue following this, we may be in choppy consolidationary conditions until at least mid-November. But if I just go to the gold chart, what we can see is gold's actually looking pretty strong, primed potentially for new all-time highs. I'll just hide that so we don't have an overlay of the same data point. What we can see is we are approaching new all-time highs here. So it'll be very interesting to watch over the coming days and weeks to see if gold can potentially break into new all-time highs, especially with the inflation potentially increasing, a bullish Fed pivot, all this pointing towards people looking for more safe haven assets. So it'll be really interesting to see if Bitcoin can potentially fulfill this digital gold narrative and rally alongside gold, potentially and hopefully to new all-time highs in the not too distant future. Also, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released, and make sure to check out all the charts we discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, global liquidity, or the M2 money supply, has been incredibly accurate for forecasting what will come next for BTC this cycle, especially when we offset that data with a 10-week delay or lag. However, what we can see is that looking at other metrics like stablecoin liquidity and gold, they provide just as, if not even more accurate insights for the potential upcoming moves for Bitcoin. We can see that stablecoin liquidity has had the strongest correlation so far, but not with the offset, and we can see there has been a divergence recently. However, we look at gold with a 10 to 12 week, as I said, it's not an exact science, it doesn't matter exactly, we're looking for the more macro trend, not the day-by-day changes in these things. We can see that it actually has a stronger correlation than the global M2 money supply over this cycle, which would lead to us potentially seeing even more predictive capabilities than this M2 money supply. And it's pointing towards a more long and sustained period of choppy consolidation like we can see within gold. But as gold does look primed to potentially break to new all-time highs any day now, it could mean that Bitcoin could be in this period of sideways until maybe mid-November, but then could be primed for a very strong end to 2025. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on potentially tracking gold's price appreciation or depreciation over the coming weeks and months to potentially predict Bitcoin's upcoming moves. Do you think this is a viable option, or will you be focusing on global liquidity or any other metrics? Let me know what your thoughts are. Thank you all very much for watching, and I'll see you in the next one.